Understand performance beyond returns. Performance is about more than returns alone. In July 2024, John invested in Taiwan Semiconductor, which has since delivered exceptional returns. But successful investing isn't just about the final result. John wants to understand how those returns compare against the market and what level of risk was involved. The time-weighted return view breaks performance into individual periods, making it easy to identify phases of strong growth, weaker performance, and changing market conditions throughout the investment journey. Adding a benchmark provides valuable context. By comparing Taiwan Semiconductor against a global semiconductor index tracker, John can see when the stock outperformed the broader semiconductor sector and when it lagged behind. Shorter intervals reveal the journey in detail, while longer intervals help answer a broader question. Was the investment's exceptional performance driven by a few standout periods or by consistently strong results over time? The time series view visualizes cumulative performance, helping investors understand how value has grown throughout the investment period. But what does that performance translate to on an annual basis? While John's cumulative time-weighted return exceeded 100%, annualization reveals an average return of approximately 75% per year, making performance easier to compare across investments and time horizons. Strong returns are certainly attractive, but they don't tell us how difficult the journey was. Maximum drawdown measures the largest decline from a previous peak during the selected period, helping investors understand the most significant setback experienced along the way. Although Taiwan Semiconductor ultimately delivered exceptional returns, John would have experienced a temporary decline of approximately 30% before the investment recovered. Comparing this against the benchmark provides additional context, revealing that the broader semiconductor sector experienced a very similar drawdown during the same period. But how efficiently were those returns generated? The Sharpe ratio measures return relative to risk, helping investors assess the quality of performance rather than return alone. Taiwan Semiconductor achieved a strong Sharpe ratio of 2.08, indicating attractive, risk-adjusted performance. However, the benchmark reached 2.15, suggesting that the broader semiconductor sector delivered slightly more return per unit of risk over the same period. Looking beyond returns alone provides a more complete understanding of investment performance, helping investors evaluate not only what was achieved, but how it was achieved.